It's a brand new week on Business Morning. Welcome and thank you for joining us on the program. I'm Chimeze Obi Iwagu. The July inflation rate will be published today by 1 p.m. local time. Analysts at financial derivatives companies see a further rise towards the 13% threshold at 12.8% year-on-year from the current 12.56%. The analysts noted several factors ranging from a 20.4% increase in PMS price to supply disruptions that are pushing up food prices. The blended exchange rate that manufacturers are being forced to use due to the CBN's forex rationing is also adversely affecting consumer price. According to them, Nigeria is not an inflation outlier in the African continent. Ghana, Angola and Uganda are also recording higher inflation rates, mainly due to food pressures. Now, the Economic Intelligence Unit is forecasting that inflation in the African region will climb from 7.9% to 8.4% in 2020. Most African central banks are maintaining status quo or adopting an accommodative stance in spite of higher inflation. This is primarily because of the need to ameliorate the pandemic effect on growth and unemployment. And talking about unemployment, on Friday, Nigeria's unemployment data, which has been long awaited, was finally released. And the report shows the unemployment rate in the second quarter 2020 was 27.1%, up from the 23.1% recorded in the third quarter 2018. Well, joining me to dissect these numbers further is the chief consultant at B. Adedipe Associates, Dr. Biodo Adedipe. We will also get the perspective of the Nigeria Employers Consultative Forum and, of course, that of the International Labour Organization. But first, let's talk to Dr. Adedipe. Good morning, Dr. Adedipe, for joining us on the program.
Thank you, Chimeze. Good morning. Pleasure being with you this morning.
You're welcome. Now, are you concerned that the latest unemployment report did not include figures for the past 6 quarters? Some analysts believe this will have a distortionary impact on the trend analysis of unemployment, as the second quarter 2020 numbers will only be compared to the third quarter of 2018, and it could also lead to a significant bias in policy decision making. What do you think?
Yes, I quite agree with that sentiment, because personally, as an analyst, I am worried because in my thinking, this is a particular agency of government that should be well funded, because without data and information necessary for planning, all you are doing is just planning the air, as we describe it. So if the latest we had was for June 2020 compared to September 2018, that is not good in terms of trend analysis, and you can't really make much sense of that in terms of the dynamics of the environment where we operate, and in fact in the world we belong to. So one of the arguments some of us have been making over the period was that the federal government should fund the National Bureau of Statistics very well, so that this critical data can be generated on a quarterly basis. That way we can see the trend and we can do proper planning. I am really, really concerned about that.
Now, do you think that the issue here is all about inadequate funding for the National Bureau of Statistics?
Well, I say that advisedly, because I've come across that personally when I probed why MBS is not putting out such critical data on the quarterly basis. And one of the things we got in the course of my inquiry was that agency did not have sufficient resources to carry out that kind of survey. So that is why I can say here that as a Nigerian and also as an analyst, I am worried that we are not funding what is critical to our planning and, of course, development. So it's a major issue there. And, of course, the other side of it is that, in my own understanding, MBS itself is quite ready. And they have proven that in the light of the survey, whose result was published just last week, Friday.
Now, many had argued that elsewhere, unemployment data is an economic tool used by policymakers in determining the health of the economy and policy direction, but it's not so in Nigeria. Do you share that same view, and why? Do you see this current data also being considered in the next monetary policy meeting built for next month?
Well, I expect the Monetary Policy Committee to consider this latest data and findings in terms of shaping the policy direction, especially monetary policy. And it is very simple. in most other climes, unemployment data, or if you like, look at it from the flip side of it, which is job creation data, is generated on a monthly basis. The worst we can do to ourselves is to do this quarterly. And of course, even quarterly for me is a little bit dated. All right. So what it then means is that if we're able to at least manage quarterly generation of such data, it helps planning, as I said earlier. But the other side is that for every critical government organ, whether it is the monetary authority, as we just said, monetary policy committee, or the fiscal authorities, these are data they should be looking at on an ongoing basis to measure the current temperature of the economy, because fundamentally, what drives every economy is employment. And if you look at it the way it is dimensioned, first is to look at the economically active population, which is age bracket 15 to 64 years. And then from that, you draw out the labor force, which of course will be those who are able to work and also willing to work. Now, from there, you now get to those who are actually searching for jobs. That means they have the ability to work and they are willing to work and actually searching for jobs. So now that is the pattern in terms of generating the unemployment data. So if you don't have that, I don't know what kind of planning you want to make. And of course, we also know quite well that fundamentally, the number of people employed will determine those that create value within your space. So the more people that create value, the more productively engaged they are, the better for the economy. If I work, I will earn. And when I earn money, I not only become also a potential in contributing to government revenue by discharging my, tax responsibilities, but on the other hand also, it gives me a sense of what we call social compact that gives me a voice to actually also challenge the government as to what they are doing with the money that they got from me as a taxable person working within that economy. So it has so many dimensions to it. That's apart from any money to take care of my own immediate family's needs and contribute to the environment where I live. So it has so many ramifications for the economy. And that is why it's an important metric to measure regularly and then respond to that in terms of the appropriate policy that will drive the economy in the right direction.
All right, Dr. Adeniyi, let's look at some of the numbers there. 27.1%, yes. That's what the figure says for the second quarter of 2020 from 23.1%. Is this in line with your expectations considering the effect of the coronavirus pandemic?
Indeed, although I may again say that I usually, when I interpret this data, look beyond the unemployment rate. I also take into account the underemployment rate. So if you truly want to interpret this and understand the sense of urgency in it, then you want to take also the underemployment rate of 28.6%. So which if you take along with the unemployment rate, we give you something in the 55.7% range. So that tells you immediately that you have a crisis on hand. So but again, you see, in context of what is happening globally, we expected this to happen when we began to interpret the effect of the pandemic economically all over the world. When we started to look at this way back in March, we told ourselves there are 4 different crises countries will be facing. There's the health crisis, yes, that you need to spend money to resolve, but there's the economic crisis that comes out of your response to the health crisis, which is the lockdown. Of course, well over 50% of global population was locked down at some point. So now the crisis from that will lead into what we call humanitarian crisis. You don't handle it well through palliatives and interventions variously, it becomes a security crisis. So all of these come together in the purview of unemployment, which means so many jobs will be lost. And the question should be, even before that will happen, what did you put in place to prevent that? What are you doing, for example, with self-employed people?
Yeah,
which is Dr. one of the ways. Yes,
Dr. Adeniyi, let me take it out from there. Now, just from what you've noted, now unemployment was highest among the youths. What does that tell us, about the government's job creation mechanisms and levels? How adequate are they, considering the growing number of graduates that enter into the labor market on an annual basis? I mean, the government have come up with so many job creation mechanisms to support the youths. Yeah. Are they adequate?
Now, first is to say that it is inadequate, but for me also, it's a policy headed in the wrong direction. And my reason is very simple. Governments cannot create enough jobs. When you look at the number of people that are unemployed, but don't also forget that where we are today, the unemployment data we're talking about today is not only the result of the normal pattern over the years. You are looking at the situation of pandemic, which on the one hand, people who had jobs lost their jobs, okay? Families also that were well off with only one member of the parents was working. Now the second parent also had to look for a job. Okay, so that we add also to those that are willing and able to work. Then, of course, you now come to what you mentioned now, which is we are producing graduates from our higher educational institutions that annually add to the labor force. So if you don't track this and also recognize that it is the private sector that actually will create most of the jobs, in which case your policy is not about government opening the space or we want to hire 500,000 teachers. Yes, it is good, okay, in terms of what that we do. But more importantly is what is the government doing in terms of policy that will help private sector operators to create more jobs. But that's why you get a lot more of what will help this economy in resolving unemployment. So it then means, of course, that government agencies will be thinking of policies in terms of execution that will help the self-employed person, those corporate entities, to actually employ more people. How will that happen? If, for example, a government agency comes to, in a particular sector, says, what we are going to do is for our services that we render to companies under our purview, we are going to charge them in a foreign currency. Now, tell me, how does that work in terms of managing the exchange value of the naira? So if my own government here will demand for me to pay for some government charges and levies in US dollars, for example, just to illustrate, that means in order for me to do business in Nigeria, where I naira, I must look for dollars to pay the government charges. So that constitutes to demand pressure in the foreign exchange market on the one hand. So how does that go back into the companies in question? So the pressure on them is that they cannot create more jobs. They will be more concerned with surviving in an environment where we have inflationary pressures on the one hand, and then the domestic currency is also losing value. Okay, so it means that we are not doing things that will make those companies create more jobs. Rather, we are doing things that can make it more difficult for them to even sustain what they have on their payroll currently.
Okay, now before I let you go, Dr. Adedipe, now the underemployment rate followed a similar trend, rising at a faster pace to 28.6 from 20.1% in 2018. Now this shows deterioration in the quality of employment. Now, inflation numbers, of course, will be published later today, and no doubt it's on the upward trajectory. Unemployment plus underemployment plus inflation, well, equals to misery. So where do you see Nigeria's misery index at the moment? For the FDC, they say 68.26%.
Yes, indeed, because we track that data. There are 4 elements that make called the misery index. Okay, you have your lending rate, you have the interest rate, and you have the unemployment rate. Add those 3 and then subtract the GDP growth rate from that. That gives you your misery index. So if you look at the pattern in the last, let me say the last 7 years, 2013 till date, you see that our misery index in Nigeria has been going up steadily. And in fact, the latest check on that data, which will be for the 3rd quarter of 2018, because that was when the 4 data were complete. So until we get the GDP data later this month, we can actually compute what the misery index is as of today, unless we just do an estimate of the GDP growth rate. But when we have the official data, now compute that, I don't expect anything less than 70%, which means that when you have misery index at 70%, it means the rate at which the regular person living in Nigeria is miserable is about 70%. So until those rates start to come down, and that is talking about the lending rate, then of course you have the unemployment rate, and of course you place that side by side with the inflation rate and then GDP growth rate. So our GDP, therefore, that's where it starts from, must be growing at a rate that can actually trade off against those 3 other rates. So it means that the real central issue here is production. We must get back to the real sustenance of an economy and going to make it to grow. And that is to produce here what we consume and to also consume what we produce. Until we are able to create that nexus, we'll be running with challenges in those 4 different rates, which means your economy is not growing enough on the one hand. And then secondly, you have a situation where it is like a running target in dealing with these 3 other rates you set the growth rate of the economy against. That's where the real challenge is. Production is the key issue. So produce what we consume consume what we produce. All of these variables will begin to change, and the BISU index will start trending downwards.
All right, thank you very much for sharing your thoughts there, Dr. Adedipe. Dr. Biodun Adedipe is the Chief Consultant at B. Adedipe Associates. Thank you for your time, Dr. Adedipe.
Thank you for having me.
All right, let's have the perspective of the Nigeria Employers Consultative Association. Now I'm being joined by the Director, Membership Services, Nigeria Employers Consultative Association, Adewale Oyerinde. Thank you very much, Mr. Oyerinde, for joining us on the show. Well, I'm sure you listened to Dr. Adedipe. What was very apt to you there from what he said? Well, he talked about private sector being the creators of job. Now, NECA is the umbrella organization of employers in the organized private sector of Nigeria. I mean, you contribute to the growth story of the economy and, of course, this employment that we're talking about. So what's happening? How are you reading this latest number released by the NBS?
Thank you for having us. I think for us, it's not really a surprise. You know, consistently over the last few years, we have sounded the alarm to government that there's a trend that we must deliberately deal with. And it behoves on government to do the needful. You know, early this year in January, the World Employment and Social Outlook report gave us the analysis that close to 1 billion persons were underemployed, and about 2.5 million will probably fall into the unemployment rate. So that creates something for us to think about. Now we are just coming from recession, and then the pandemic came up. The challenge for us, or the question we should ask is, since after the recession, what exactly have we done to reverse that trend? And the NBS, let's commend the NBA Bureau of Statistics for coming up with those figures. It's quite a bold move. Now the question for us, beyond the rhetorics of the statistics, is why did we get to this point? Why did we wait this long for this report to come? It's not as if we're expecting a magic that the unemployment rate will go down from Q3 2018, we go down and a very beautiful figure will come out in Q2 2020. We weren't expecting that. We know something will happen. And the challenge is, why did we wait this long to do it? He mentioned, he created the foundation for the discourse, basically. Now we know globally, government doesn't really create jobs. The private sector creates 9 out of every job created. And our experience in this climate has shown that government can really not manage businesses. You know, so many businesses that government, Nigerian Airways, Nigerian Railway, Nitel, Ajaokuta Steel, we have a trend and experience of government not really managing businesses very well. Then why not focus on those that can create the jobs? The issue of unemployment, let's look at it from two perspectives. Perspective of the supply side and not the demand side. Yes, we are churning out graduates. We can't control that. We can't say schools should stop producing graduates. That can happen. So we'll keep producing graduates. Now, from the demand side, businesses should employ. Once they can't employ, or once they can't expand, that means they cannot take in those graduates. Once businesses close down or they move to other climes, that means unemployment will increase. Then once we can't bring in FDI, foreign direct investment, that also means that there's challenges increasing employment. Then the natural thing to do, or what is expected, and my principals have said it in many climes, is why not focus on those that have the capacity to generate employment? Why not come up with pro-growth policies that will help those that can generate employment? It's a win-win for government, and it's a win-win for all of us. In fact, they call it a self-enlightening interest for government to focus, and he has mentioned it, to focus in supporting private businesses to be able to create employment. The regulatory environment in this climate is quite challenging. And when agencies that are meant to promote businesses are the ones strangulating businesses, then it creates a different challenge. And once you don't support the local businesses to thrive, then it becomes difficult for you to convince an investor to bring his capital to this environment to create jobs for you.
All right, Mr. You just hold your thoughts there. We'll come back to this conversation after the break. We'll take a quick break. We'll, of course, continue with this conversation. And, of course, we'll get the perspective of the International Labour Organization on the same issue. Just stay with us. Thank you for staying tuned. We're still talking about the latest unemployment data released by the National Bureau of Statistics, and I still have you with me in the studio. Adewale Oyerinde, the Director Membership Services, Nigeria Employers Consultative Association. Yes, before we went on break, you talked about the regulatory environment. Now, recently, the federal government came up with a new KAMA law. How would that help? How would that support employment in Nigeria?
Well, the KAMA will play its role, and one of the key components is reducing the bottlenecks in registration of businesses, amongst many other things. But the regulatory environment goes beyond what KAMA will do. And we have to look at the tax environment, because presently we have businesses being burdened with so many taxes, so many levies, what we call extortion in so many names now. So the regulatory environment contains the tax environment, infrastructure, and so many other things. Now the challenge for us is this. In a few months' time, the implementation of the AfCFTA, African Continental Free Trade Agreement, will start. Now, if we don't take a deep look in making businesses competitive here, then we open up the environment, we open up the West African sub-region, we open up the African region for businesses to bring things, to bring services. If we are not careful, the rate of unemployment will increase, because as an investor, why won't I go to a better clime to go and produce when I can bring into Nigeria and sell? So the regulatory environment in the context of what regulatory agencies are doing, are they facilitating businesses? Are they promoting competitiveness, or are they stifling those businesses? I mentioned the issue of tax. The tax, they come in so many different ways now. Let me share what happened in England just a few days ago. The government came up with a policy to support the fast food business. First, to promote, to make sure that jobs are protected, and to make sure that those businesses are protected. And they come up with the eat out scheme. Now you go out, eat, government will pay a percentage of the fee that you're supposed to pay. Is to drive production. And that way, not only the fast food that will benefit. Now, the farmers that are producing, they will benefit. So as you are pulling the fast food out of the crisis, the fast food is pulling so many other sectors with it out of the crisis.
As a value chain there.
Those are the deep thinking that we think government should do to make sure that this environment is competitive, it's not strangulating, and it helps businesses to be sustainable long term.
Now, if I may ask, what percentage of workforce did your members have to let go because of the coronavirus pandemic?
While I can't give a specific number, early this year we completed a survey in partnership with the ILO on the effect of COVID-19 on businesses. And I think we are on this platform to say close to 70% of businesses actually closed down. And while we urge our members that please let disengagement be the last resort. And many of those members either that cry. Many did not retrench. They still keep their employees. And also in the course of it, we had an MOU with Labour, NLC, to make sure that, look, to a large extent, jobs are protected, pending when we all come out of this COVID-19 crisis. So while we cannot give a specific amount of a detailed figure on how many were released, yes, some were released, but substantially, businesses try to maintain and keep their staff.
Now, a quick one before I let you go. What's the nature of engagement your organization, that's NECA, what nature of engagement have you had with the government on matters, like this?
Yeah, we have so many engagements. My principals have engaged the presidency, we've engaged the task force of COVID-19, we've engaged the CBN, we've engaged the agencies themselves, regulatory agencies, all with the focus of let's together, collaboratively, create an environment for businesses to thrive. You cannot shave my head behind me. If businesses are feeling the pinch, then you have to understand their problems, you have to understand their challenges before we come up with policies. We cannot come up with policies that will be counterproductive to those businesses. So for policies to be effective, for policies to promote growth in the environment, then the input, the deliberate and significant input of the operators in that environment needs to be taken into cognizance.
All right, thank you very much for your time.
Our pleasure.
Mr. Oyeride.
Yeah.
Adewale Oyeride.
Yes.
Yes, he's a director, Membership Services, Nigeria Employers Consultative Association. Okay, we're being joined now by the Director, International Labour Organization Country Office for Nigeria, Ghana, Liberia, and Sierra Leone, Mr. Dennis Zulu. Good morning, Mr. Zulu. Thank you for joining us on the program.
Good morning. How are you this morning?
Very well, thank you. Well, the ILO, in its 5th edition monitor, which is titled COVID-19 and the World of Work, stated there was a 14% drop in global working hours during the second quarter of 2020. That's equivalent to the loss of 400 million full-time jobs based on a 48-hour working week. Now, looking at the recently released job report by the National Bureau of Statistics, how would you assess this within an international comparative analysis? Is it in tandem with expectations going by your analysis of the impact of COVID-19 on the world of work?
Yes, but first of all, just to commend the National Bureau of Statistics for issuing out the report, which is very useful in terms of policy and other issues that have to go with dealing with the problem of unemployment. Yes, as you correctly stated, we know that because of the number of things that have happened since COVID, one of them being the shutdown of economies, we anticipated there would be a loss of work hours, but also there'll be a loss of jobs. So really the statistics that are coming out of the National Bureau of Statistics are in tandem with what is expected. But you also see that prior to COVID, Nigeria was already, when you look at an analysis, a time series analysis, you'll see that Nigeria was already experiencing some sort of increase in the number of jobs that were being lost, but also an increase in the number of unemployment. But since it's now 5 quarters since the last report was released, and so the current report actually is very much in tandem with what we expected, and we've seen an increase in unemployment, but also an increase in underemployment. But for us, what's also striking is the fact that when you look at the labor force, it's interesting to note that in Nigeria, there's been a reduction of approximately 11.3% in the labor force, which basically means that some people have given up looking for jobs and have become sitting at home and really frustrated in the lack of opportunity as far as jobs are concerned.
Of course, what we've been talking about, the time lag in the release of this report. The MBS is releasing this job report for the first time since 2018. Most developed economies release unemployment data monthly, but that is not the case in Nigeria. What is your organization doing in providing the necessary support to the MBS to even make the quarterly report regular?
Well, yes, I think that's a general problem across the continent of Africa. It's not just unique to Nigeria. On the continent, I believe it's just South Africa that issues labor force surveys on the basis, on a monthly basis, but the rest of the countries really struggle to produce the data on a monthly basis. We've been engaging the National Bureau of Statistics to see how we can support their capacity. As you know, it's very expensive to undertake the surveys, especially on a monthly basis. So one of the things that we need to do is perhaps see how we can ensure that it's not just the National Bureau of Statistics who collect the data, but also the ministries of labor and other institutions that are involved in the labor market, including the employers who've just been speaking. So really, an integration of all these different data sources should be able to give us sufficient data, which should be enable the National Bureau of Statistics to issue them on a monthly basis. So, and also, I think only a few years ago, we collaborated in supporting them in looking at the way labor and employment is measured in Nigeria. So you'll see that since then, the National Bureau of Statistics has strived to obviously produce data on a quarterly basis, but I'm not really sure what the constraint has been over the past few quarters when they didn't issue. But as far as capacity, I believe they have the capacity. It might just be a problem of financial resources, because it is an expensive undertaking to produce data on a monthly basis.
Now, the report shows that vocational education graduates have the least unemployment figures, while graduates of tertiary institutions have very high unemployment rates. What's your perspective on this?
Yes, I think this is what we've been trying to say all along. For most developing countries, I think what is really needed is technical and vocational skills, because this is really what the market demands. In a lot of cases, we see that there's a lot of movement, and this is also very obvious in many developing countries. There's this natural movement towards getting academic qualifications, which don't really meet the sort of demands that employers want. I think employers really want hands-on experience and ability to deliver on day one, and you find these skills in technical and vocational education training. In academic institutions, really, it's more about theory and academia. So you'll see that those students who are able to deliver on day one tend to find more jobs quite readily, unlike those who gone for academic qualifications. And this is also very obvious in the developed world. Germany, for instance, where the focus really is on technical and vocational training, because that's where the demand is. Nigeria needs artisans, Nigeria needs technicians, bricklayers, and all these people who really are needed, and technicians to build the country. So you'll see that people who have technical and vocational skills tend to be much more marketable, because that's what the economy desires, especially when you're developing an economy like Nigeria has at the moment. So that was fairly expected. So I think what we need to do is really invest more in technical and vocational training, so that we can turn out young people who have the requisite skills that the market demands in these areas.
Now, from a gender perspective, the report shows that more female are unemployed at 32.6% as against male 32.9%. What's your take on that?
Again, unfortunately, this is a problem we have across not just the continent of Africa, but globally. Women tend to be in a lesser favorable situation in terms of accessing and job opportunities. So I think what we need to do more is encourage women, but also some of the laws that we have in place across the world tend to discriminate against women accessing employment. But it's not just about employment, it's also about the skills that women possess. Because you find that the girl child will normally drop out of education even much earlier than the boy child. And so their ability to acquire the requisite skills and therefore to get an appropriate job is limited. So we really have to go back and ensure, first of all, that the girl child has access to education, and the girl child has the skills that are needed to be able to access these jobs. But also, I think in certain cases, you still find that there's still a glass ceiling. And this basically limits the opportunities that women have in terms of accessing jobs, but also high-level jobs. So it has to be a comprehensive approach. Look at the limitations, the constraints at the education part, but also look at the constraints in opportunities that arise. One of the things that we're trying to do with the ILO is ensuring that the respective laws that permit or that inhibit discrimination of women in accessing jobs are removed, and so that women do not have any legal or policy constraints in accessing jobs. But then we still have quite a bit of work to do, given the statistics that reveal indeed that women tend to be much more, to have less access to jobs, and tend to be more unemployed and underemployed in most cases.
Now, Mr. Zulu, a quick one before I let you go. I really want you to talk about this. Is it appropriate to regard a full-time housewife as unemployed despite the heavy responsibilities of taking care of children and at home? What's the position of ILO on the contribution of women in this area?
Well, you see that in statistics, really. We do recognize a housewife as usually you find that their contribution to the economy are taken care of under the gross domestic product, the gross national product statistics. But they're also considered to be employed, because if you imagine a situation where the woman was not employed, they'll probably have a maid or somebody else doing the work that they're doing. So using proxies, you can actually account for the amount of work that the woman puts in. And therefore, it only makes sense that the woman should be considered to be part of the employment statistics. Because like I said, if the housewife is not doing the work and she was working in another location, then there'll be someone else doing the work on her behalf, and this person is paid an income. So this income can be used as a proxy, but also it helps in determining the number of people who are working. So it basically makes sense to say that the woman is being productive and adding to the gross domestic product in the country. So it's a very fair comment in this respect.
All right, thank you very much for sharing your thoughts there, Mr. Zulu.
Thank you so much.
Yeah, Dennis Zulu is the Director, International Labour Organization Country Office for Nigeria, Ghana, Liberia, and Sierra Leone. And for a quick review of last week's equities trading and outlook, we have Temple Ashaju on board. Well, Temple, the week looks bright. I hope it's bright as well at the markets.
Oh, yes. That's something that a lot of analysts have also predicted, as it were, from the records that we saw, the reports that were released last weekend, actually. And we do hope that that is something that will come through because, again, some of the companies in the market have actually declared some interim dividends. We're watching the consumer goods space, the healthcare companies like FeedSyn that has already declared some 15 kobo interim dividend for investors. That's something that we do hope will push up the indices of the markets going forward. So last week we got some 0.63% gain in the markets. That's quite positive. We added some 82 billion naira to the equity capitalization of the exchange. Investors were very positive on the market, were bullish last week. Volume of transactions was also very impressive, was up by more than 20%, including the value of the market that was up by more than 28% last week only. So we saw in terms of volume of transactions, some key gains from 122 million units of GT Bank shares traded. And of course, Transcorp did some 113 million units of shares as well. GT Bank also added 33 billion naira to what you have here in terms of the value of the transactions in the market, while we in total had 19,392 deals in the market. Look at the banking stocks. They were negative in terms of sectoral performance now last week, and that's because we got some key sell down of about 8% on Unity Bank. ETI was also down by more than 4%, but we saw a moderation of all of these losses in the banking stocks by the gains, the 2.3% gain that we saw on GT Bank, and of course a couple of other counters like Zenith Bank in the space. The consumer goods side of the market, 2.25% positive. We saw a 12% gain on Nigerian breweries, and of course a couple of other companies. The industrial goods side of the market, in spite of the 560-something million naira worth of transaction that we saw on Dangote Cement, it was a negative of 4.1%. That brought down the performance of this sector, including the losses that we saw on Boa Cement. Lasaco was up by 10%, and that impacted on the insurance space. Seplat and Oando got some additions to what we have in the oil and gas segment of the market. We have joining us now, Charles Fakroga, who is the chief dealer for City Code Securities and Trust Investment, a member of the Nigerian Stock Exchange, joining us via phone. Mr. Fakroga, talk to us about what the outlook of the market is for this week. We know that MTN has also declared some interim dividend as well as Flour Mill. Of course, we're going to be seeing some kind of price adjustment on these key companies. Are we going to see some kind of mixed sentiment in the market this week, coupled with some profits taken?
Yes, hello. Thank you, Temple, for having me. Yes, we are going to see a lot of price adjustment in the market this week, and I think it's an opportunity for investors to also position themselves in this company, because looking at the harsh economic environment in which we are, despite the pandemic, we still see the NSC doing 4.8 month to date, while doing 0.8 in which is very performance and other market last week. So what this price adjustment is an indication for investors to position themselves for these companies taking advantage of their low price.
Right. We also know that the healthcare companies, name it, FeedSyn, are key segments of the markets to watch. I mean, what are the opportunities for investors in that space? Yes,
you know that the healthcare system has been a problem in the country, and some of these companies are trying their best to ensure that they deliver service to the customers and investors at large. So I think it's an opportunity for investors looking at the low price of these stocks in that sector to take advantage of them and position themselves on investment objectives.
And finally, before I let you go, what's the expectation of the market around a lot of the Tier 1 banks that are yet to release their H1 and Q2 2020 earnings for the week, for the rest of the year?
Well, from the research, from what I've seen, looking at the performance for last year, these banks, generally the companies listed in the exchange, most of them are very resilient. They are trying their best. They are doing so much. We must commend the management. We must commend stock exchange. I see the trend continuing this week with a little adjustment. But at the same time, investors should be cautious in their trading and get in touch with their stockbroker so that they invest in equities that will meet their own investment objectives.
All right, Mr. Charles Fakroga, thanks a great deal for joining us on the program. Charles Fakroga is the chief dealer for City Code Trust and Investment, a member of the Nigerian Stock Exchange. Chimeze, is back to you.
Thank you, Temple. And we'll take a break. And when we come back, we do a quick crossover to London and then get back to you for the debt and currency market. Okay, let's get updates from the streets of London. This time we have Simon Piezet on board. Hello, Simon. Good to see you. Good morning. Well, Japan is the latest in a string of Asian economies to report drastically lower second quarter GDP data. Now, does this data coming out from Japan matter to the UK?
Yeah, morning, Chimmy. Yeah, the Japanese economy, as you said, has shrunk at its fastest rate on record as it battles the coronavirus pandemic, as does the rest of the world. It is, of course, the world's third largest economy, but it saw gross domestic product fall 7.8% between April and June from the previous quarter, which equals more than 27% on an annualized basis. It's worth pointing out that Japan was already struggling with low economic growth before the crisis hit. It's also worth pointing out that Japan's economic dip may be worse than countries like South Korea, its neighbours, but it's actually much better than European countries, as while Japan was forced to close schools, they were able to avoid such strict lockdowns that we've been used to seeing in Europe. The UK, Japan, it is important here. The UK and Japan is hoping to agree details of a post-Brexit trade agreement by the end of this month. Progress has reportedly been blown off course after the International Trade Secretary here, Liz Truss, requested better terms for British blue cheeses. So I think it will be interesting to see exactly how their economy fares, but I don't think it will really have too much impact on those trade talks.
So how have the markets opened up for the week, and what should we expect this week?
Well, global markets, are subdued this morning after that news coming out of Japan. Of course, Japan's Nikkei is down almost 1%. Fears of new COVID-19 lockdowns and travel restrictions are also hitting shares in airline and hotel operators this morning. Airline operator IAG is the top FTSE 100 faller. It's down 2.6%, back towards the 7-year lows that it hit earlier this month. However, house buying in the UK has seen a bit of a boom, and it's a bit unexpected that in July it was £37 billion was spent on property deals. That's according to the property website Rightmove. So it's not all bad news here in the UK, and the FTSE 100 is up close to 0.5%, while the FTSE 250 is also slightly up too.
All right, Morrison's is planning to ditch all its plastic bags for life, following evidence that they are being used once and thrown away. Tell us more about this.
Yeah, this is interesting. So a lot of supermarkets in the UK years ago decided that they were going to end single-use plastic bags. They were going to just do bags for life, as they're called. Well, Morrison's is saying they're going to consider stop doing that. They're going to do a trial, and the reason they say that is they think people are taking these bags for life and actually throwing them away, not using them again. So they're going to move to a paper alternative. So from today, Morrison's will offer strong paper bags instead of reusable plastic ones in 8 stores, and if customers seem to be happy with that, then they will implement them in all 494 stores. As I said, Morrison's say the paper bags can carry up to 16 kilograms and have handles to carry up to 13 bottles of wine. I don't know who's buying so much wine. All leading supermarkets are trying to cut plastics use, of course, a big PR thing as much as anything. Morrison said there was evidence bags for life are being used once before being binned. It said a full replacement of its bags for life would save 90 million plastic bags being used each year. That's the equivalent of 3,510 tons of plastic every year.
Well, the day has just started, so I'm sure you'll have more update for us later in the day, Simon. Okay, back here on the debt and currency market. Let's get back to Temple.
Yes, Chimeze, thank you so much. Let's quickly look at the NASD to see before we move on up to the debt and currency side of the markets. We added some 5 point-something billion naira to the unlisted securities markets last week alone, because if you recall, this market has actually settled the previous week at some 518 billion naira. But if we look at what we have now, we've got some 524.08 billion naira. Where did all of these gains come from? These gains that actually translated to 1.05%, they came from a couple of companies that you have listed in the market. You have WAMCO, which is your milk maker in the country, and of course, we know that they've done some, their market capitalization is around 124 billion naira in this market. We also know that we have the NDEP, that's Niger Delta Exploration Production Company, that has over 50 billion naira worth of market cap in the market. These two key companies accounted for a lot of the gains, and of course the volume of transactions that we have here, which totaled 813,532 units of shares rather last week only. The value of the transactions that we saw last week was 48.13 million naira. Of course, all of these was in 35 deals. Of course, these two key companies also contributed massively to that. We also know that last week only there was so much of cross-dealing on First Mortgage Company Limited. Look at the debt and currency side of the market, bonds specifically first. Of the 5 trading days that we had in the week, the bonds market actually gained some 4 out of the 5 trading sessions, but we know that it was quite bearish last week, again, because the bid-offer spread on the market was a bit mixed. Again, we know that interest was a bit more on the at the longer end of the curve. You have the 2050 paper here, and at this point, you had a decline in the yields of at the yield for this particular paper, and of course, the 2049 paper. But if you look at the mid-end and of course the short end of the curve, investors were not too interested in that space, and that's where we saw yields expanding for that space. But generally on Friday we had 23 deals, and of course 72.67 billion naira worth of transactions. NTB was quite positive last week. Investors came back. I mean, on Friday alone we got 2.1 billion naira worth of transaction across the 12th of August 2021 paper. Of course, this settled at 3.15%. Look at the OMO side of the market. We had an OMO auction during the week as well, and that also impacted on the open market operations papers that we have here. Joining us on phone now is Bosun Obimbe, an FX dealer with Access Bank. Bosun, let's talk about the FX space briefly. Last week we saw a 0.2% week-on-week decline on the external reserves to some 35-point-something billion. I mean, what are investors saying about this space, considering the fact that last week we didn't see no FX sale at all?
Good morning, thank you for having me. So if you look at the reserve, it was only on Friday that we saw a decline. If you look at it week on week, we just have the 32 million decline. When you compare to the previous week, where you have like a decline of about 108 million. So we've been seeing some increase in the reserve of recent. And if you look at the high earning window, even though the turnover declined week on week by about 120 million, we have seen improvement in rates. So you look at week on week, we saw the rate traded flat, and it then has continued to actually get confidence in the market. So on Friday, there was a retail SMIS auction where we expect the results to come out on this Friday. So CBN is going to sell at least 300 million into the market. So CBN has actually made the market a bit liquid, and on a weekly basis, CBN has been selling 100 million for school fees and for traveling and for SME at 386. So the market has been quite liquid, though we'll not be seeing the flow we used to see in the market because of the unattractive yield that we have in the fixed income space now. But we expect this to actually change very soon, because we've been seeing some signal from CBN trying to clear the backlogs from the foreign investors. So that will actually make the market to be a bit liquid again.
Okay, so last week we saw a situation where the CBN spot rate was flat at 181 naira per 381 naira rather per dollar. Is there anything likely to change this week?
This week, no. If you look at the CBN official rate, it has been at 381 all through when it was moved from 361 to 381. So we expect that to actually be at 381. But because the volume that happens on that level is quite small, so it will still trade at 381. However, I expect rate to actually remain at 386 level this week in the high earning window. And for the SME and invisible as well, CBN is going to sell funds for SME. You know, the governor's objective has been to actually go through the small and medium scale guys. So we've been Even as we send it to fund every week to banks at 386. So customers can carry come to the bank to buy $20,000 per quarter at 386.
All right. Bosun Bumbe, thank you so much for your insights on the market, and let's hope for a profitable week ahead. Bosun Bumbe is an FX dealer with Access Bank PLC, listed on the Nigerian Stock Exchange as well. Chimeza is back to you now.
Thank you, Temple. Well, I'm sure it's going to be a great week. I'm very optimistic. All right, it's on that note that we wrap up today's edition of the program. Thank you for watching. I'm Chimeze Obi Iwagu.